Just checking to see if I'm live. Let's see. Okay. So we are good. All right, everybody. Welcome to Friday, August 1st, and the markets are now open. I just realized that. Anyways, we are running a little bit late today. I was trying to fuck around and get the Xstream running today, but that didn't seem to work. So that's okay. We'll get that some other time. But welcome to the stream for today, and we're going to be talking about stocks and all that fun stuff. And we have a lot to get to. So let's jump right in, okay? Close the other tabs. This was the stock that we were watching yesterday, actually. So this was Planet Labs. Today we had the jobs report that came out this morning, and I guess people didn't really like it. So basically what happened with this guy yesterday is we bought it right around here, and we actually used the 21-day as a stop. So I got stopped out at $6.36. I think that this will soon be a buying opportunity. I might buy it around the 50-day. I just like to get the morning volatility out first. But this one here is definitely on my watch list. Okay, so what did I end up buying yesterday? I actually bought a ton of this, what's called the UVIX. Okay, so UVIX is essentially a way of shorting the market without actually shorting the market. I mean, you could buy this and it kind of goes along with the volatility. The thing with the UVIX is that it is a decaying asset, obviously. So if you get stuck in this, okay, if you get stuck in UVIX, then you might as well just cut your losses, because the reason being is that it just keeps going down and going down. Now you're probably wondering, how do they do it? Well, what they do is they dilute the stock, they reissue more shares, which then brings the value of the stock down without actually having to change the price. So if you look back, like, see, it was all the way up at what is that, 121,000, or no, that's $12,000 a share. Now obviously this was not $12,000 a share. This was always in around this kind of price range, $20 or so. But basically it is a way to capitalize on volatility in the market without actually having to short the market. I mean, my biggest thing is that I hate shorting the market. It always seems to come back and bite me in the ass, and I just prefer not to do it. Anyways, this is the biggest watch for right now. Amazon as well had their earnings yesterday. I forget exactly what the numbers were. I believe that they actually beat, but then they forecasted for lower guidance, which is not ideal and which is not really what the market wanted to hear. So that is a pretty violent bar down there. You got a nice gap down. And I mean, I hate to say it. I really hate to say it, but this candle right here is a no-brainer. And this kind of setup right here, so what you see here is that I know what you're probably thinking. Well, what do you mean? So basically, if you look here, this is a sell day. It ended red. And what I actually don't like to see is that it ended red at the bottom of the candle. That is not a good sign. And it is actually more sell volume than buy volume the day before and then the day after. Okay, so that is something to keep in mind. Like, if you see here, I know it's not by very many shares, but it is still a sell volume, or sorry, it's still a still low volume nonetheless. I mean, it's really only 5% less volume, which is not very much when you're talking millions of shares, but it's still nonetheless it went up on less volume, and also it closed in the middle range. Now, this bar here is your telltale bar to short. Look at the fucking volume on that. The volume's just insane, and we shot up in the morning and sold throughout the entire day and ended at the bottom of the range, right? So that is an obvious short, especially, I don't know, probably this candle here is where I'd say, you know what, okay, maybe we got something going on. And then you kind of get that dead cat bounce, right? So you get a blow off top, which would kind of be what that was, and then you get a dead cat bounce on the 5-minute chart, right? So it goes, and then you think, oh, okay, this is just a little morning volatility, it's selling off. And then a lot of the times people will actually go and try to basically go long on this setup, but that's where you kind of get your ass handed to you. Is usually what I like to do, and what a lot of smart traders like to do, is they actually like to wait in the morning. So they don't buy right away. They don't buy at 9:30. They wait till 10, let the early morning volatility work itself out, and then they'll get into it. But I personally think, I mean, that's a good idea. I try to do that as much as possible, but I also find too that you get deals in the morning. A lot of times things end up down and then they end up coming back throughout the day, so you got to be vigilant. So one thing to keep an eye out for in the next week to come is this right here, okay? Now you're probably wondering, what do you mean by that? That is a gap, and about 80% of gaps get filled, okay? Let me say that again. 80% of gaps get filled, okay? So you could go and back test as long as you want, and what you will find is that every gap gets filled. So here we are. We had a gap right here, okay? It got filled-ish, okay? But even when it didn't get filled there, it got filled over here, so it doesn't really matter. And also too, keep in mind that goes on the opposite end as well. So you have a gap here, right? You have a couple gaps actually, and one bar kind of filled in the gaps for all those days. Now, something to keep in mind is you have this gap right here at 532, but I hate to say it, if this gap gets filled, what's your next gap that's going to get filled? Then you got the 490 gap. Okay. And I'll tell you what, I don't want to be long at a 490 gap on the Qs, because that will not be pretty. That'll almost be back where we started in April. And keep in mind too, August and September are seasonably shittier months. So we tend to not perform as well during August and September. Now, I don't want to be super bullish just because, or super bearish just because today we're going down. We got to take a look at everything else, see if there's anything else that's doing good. So this here is basically the inverse of the 10-year bond. I know it says 20-year, but I believe it might be the 30-year bond. So whenever that goes down, which is TBT, whenever this goes down, which is the rate, and which is the fucking bond rate, when that goes down, the 30-year bond rate goes down, this TLT goes up. Now, here's a little life hack about this one here, okay? So everybody tells you about dividend stocks, okay? And yes, this one does pay a dividend. Now, I know that's a scary looking chart, for sure it is, but this one here pays you a fat dividend. So you get almost 4% a year on your money. And hey, guess what? It pays you out every single month. Okay. So a lot of these dividend stocks won't pay you out every single month. So let's take this, right? Let's call it. So you get 0.33% every single month just for holding this stock. Now, obviously that doesn't sound like a lot, but if you have, let's say, 1,000 shares, let's call it 87,000 in the stock, okay, and then you get 0.33 every single month, or sorry, I did that wrong. That would be pretty amazing. 7,000 times 0.033. Be $2,800 a month that you get for holding the stock, which is not too bad in my opinion. So another thing to look at during this is oh shit, fucking right. So I actually own a ton of this stuff, which is home builders. Okay, now home builders have been getting slaughtered over the last, I don't even know, like the last. Well, you can look at the chart, okay? It's almost been a year since they've been getting slaughtered, okay? So what is this? This is December, so not quite a year. But basically, it is building out, and I'm playing this for a longer-term hold. I'm looking to get this, or I'm probably going to sell mine at around 104, 100 and something, in around there. And the reason I say that, and the reason I'm so bullish on this, is because it is actually forming a very large, what do you think? Cup, okay? It's forming a extremely large cup, okay? You see it's starting to cup very nicely. And for it to actually cup and then handle out, you're going to have to be at the 105 range. And that's where your cup ends, okay? So right now, it's about 27% away from its 200-day moving average, which is about $80. So I personally believe that it will actually make that. It'll make that cup, and I think it will handle out and actually punch higher. And like I said, there are some gaps here too. There's a gap right there. So it has to fill that 122 gap. So that could be one to kind of keep an eye on. The thing is, you have to be able to stomach this thing, okay? If you are somebody that is, like you buy a stock and then you hover over it like a newborn child, you cannot do that with this one, because this one here will be like your best friend, and you're like, holy shit, this is amazing. And then the next day it'll fuck you super hard like you've never seen before. Like, for example, this doesn't look like all that crazy right here, but keep in mind, this was a 22% jump, okay? That was 22% in one day, okay? And it almost gave it all back in, what is this, 1, 2, 3, 4, 5, 6, 7 in a week. It pretty well gave it back in a week. So that is something to keep in mind. Like, it pops, it moves, but it is the triple leverage as well. So keep an eye out for that, because it does move 3 times as fast. So let's look at something else here. Teckle, excuse me. This is essentially the same thing as Nail, but it's 3x the tech sector. Okay, so this would basically be like buying fucking Apple, Meta, Google, Nvidia. Like, all the big names are in this Teckle, and it's basically like a one-stop shop. It's an entire ETF where it's basically everything. Everything's in this Teckle, and it's 3x it. So whatever it is, whatever that average cost comes out to, times it by 3. So right now wait a minute. I wonder if it's the Qs. No, it's not 3 times the Qs. Wow, the Qs are just dumping today. So that is so that's good for UVIX. UVIX is doing pretty good. I'm probably going to hold this for a little bit, maybe for the month, just because you do get some very, very, very explosive moves in UVIX. So, like, right back here, right? You're at $40 and it shot up to 105. Now, will we see that? I don't know. But last August, look at this. Now, I don't know if you guys remember what happened last August, but it was the Japan thing. It was with when people were, so basically what happened was there were investors that were borrowing money from Japanese banks in Japan, and they were dumping it in the stock market. And basically what happened was is Japan recalled all of their loans out, and it just collapsed the market in pretty well 3 days. Like if you look back here, boom, right down, but it recovered quite quickly. It was kind of due for a shakeout, which I hate to say it, it almost looks like it's kind of forming the same sort of scenario right here. Now, this was obviously news right here that caused that, but still, nonetheless, I mean, the charts don't lie. I mean, it's got the same kind of pattern to it, which I don't know. I don't know if that should be scary or what, but I personally think that we close this, okay, the 532 gap, okay, and then I hate to say it, but is there a gap there too? Oh no, I think that's filled. But we might even see, what is this, 4? Yeah, we might get down to 500, honestly, which would not be very pretty, but it's okay. It's good if you predict it beforehand. But if you're part of that come down in the fall of it, then you really don't want any part in that. Okay. So what I find is the best is my app, Stocks AI. So today the market is down, so you could ask it, why is the stock market down today? All right, so it'll actually go and it will find news articles for today and kind of the overall market sentiment. The stock market is down today primarily by mixed signals from the recent Federal Reserve communications and economic data. After a day of swings, the S&P opened higher but then retreated and struggled to regain ground, reflecting investor uncertainty. The Fed. Additionally, recent inflation data showed increase in both headline and core PCE, which is considered hawkish and supports concerns about inflation pressures. These factors, combined with month-end portfolio rebalancing, are causing downward pressure on stocks, especially smaller cap stocks, which have underperformed more significantly. Yeah, so basically it tells you exactly why we're down today, which is gorgeous. I mean, that's exactly what you want. So it is saying that small caps are having a shit day, and I do agree. So TNA is also another one of those triple leverages, but let's look at IWM. IWM is essentially the Russell 2000, the 2000 small cap stocks, okay? If you like small caps, which that would be your PL, that would be your Rocket Lab, ASTS, Open Door. I know they just had their little meme era there. But essentially anything that's under $1 billion. So, $1 billion to about, I want to say 13 billion is considered small cap, IWM. Wow, yeah. See, this is why. So, if you are ever wondering why you need to put stop losses in place, this is a pretty great chart to explain why you need to do that. So, if you're wondering, actually, first of all, what the fuck a stop loss is, what a stop loss is essentially when a stock hits a certain price, there's an automatic trigger that will essentially pull you out of the stock and basically sell the shares for you automatically. Now, why is this good? The reason that this is good is because, for example, look at this. So you have yourself a massive cup and a nice handle. And honestly, this chart did look buyable. It looked buyable right here, right off the 21-day moving average would have been a nice buying point. Okay. And you anticipate this to shoot up and just keep going, right? But you can't do that. You see, as soon as you had your breakout above the resistance point after the cup and handle, you had it followed by a red day. Then it tried to recover, but then it couldn't the next day. So what you would do is essentially, so if you bought it on the 21 day, and let's say you want to actually keep a bit of profit, I would have used the 8-day moving average as my stop loss. So that could be a little bit too tight. Yes, I agree with that. It might be a bit tight, but I think that the 8-day moving average would have been perfectly fine. And you get to pocket a little bit of profit for yourself, and you're not part of this, okay? That is not nice. Nobody likes that. So essentially for today, what are some stocks to look at? Essentially, don't look at anything. Honestly, today is not the day. Tomorrow might not be the day either. This could just be getting going. And I also want to preface that shorting it, which, by the way, this is another one, SQQ. I actually hate this one, okay? I actually hate SQQ, okay? And not the reason is because I always lose money shorting the market, which that is 150% the reason why I hate this. But it just doesn't make sense to me, okay? Because SQQ is supposed to short the TQQ, right? But the thing is that the moves don't feel as powerful as the TQQ. Now, obviously, yeah, that makes sense because TQQ is long and SQQ is short. But the thing is like when it goes down, it doesn't really, like, it only pops up $1. You know what I mean? Which kind of makes sense because as it melts down, right, that same percentage has less of an effect on the stock. Okay? Do you kind of understand what I'm saying? So it's like, since this SQQ is a decaying asset, okay, let's say for example, you bought it in around, like, I don't know, let's say $20, okay? Let's call it $20, okay? Buying it at $20 would be equivalent of buying the TQQ around, I want to say 82, let's call it. So since then, from $20, it dropped down to 18 or 17, let's call it, okay, which is only $3. It really only dropped $3, the SQQ. But this one, from 82 to 92, which is $10. So a 6% drop on the TQQ is more dramatic than a 6% pop on the SQQ because it's 6% of the $17. Do you kind of know what I'm saying? Maybe it's a little bit too, maybe I'm a little all over the place right now with this explanation, but essentially the reason why this doesn't have as much gusto is because it doesn't really move that much. So you almost had to buy this yesterday to anticipate a pop today, okay, in the SQQ. Because if you're sitting and you're using it as insurance, okay, which you can buy insurance with this essentially is when everything's at all-time highs and I prefer the UVIX for this reason, but let's say you want to buy the UVIX, okay? UVIX you could buy at an all-time low, which was pretty well a couple days ago, and use that as insurance for yourself to help protect your portfolio. Now, you could also use SQQ as insurance, but I really don't recommend it because it won't really change anything. Like, you know what I mean? It doesn't have that push to it, you know? And the UVIX does. The UVIX, if I were to buy any insurance on any portfolio of mine, I'd probably do the UVIX over the SQQ. That is my opinion. But essentially what The kind of overall take for today is don't buy anything, sit out, wait, and yeah, Monday is going to be a new day. End of month rebalancing. August, again, is a shitty month. So be careful this month, and also September as well. Careful for September. That is also shit. So thank you guys for watching, and I'll see you guys maybe later on today. I don't know yet. We'll see how we're doing. All right, take care.